Onchain Ca H.
Onchain Ca H. Onchain Ca H.
Hello. Welcome to another episode of Onchain Ca H. This is another episode by the FraxForce. Here, Aniceto, member of the FraxForce, and we are here another week that we are gonna see some of the news that happens on the crypto world in general, stablecoins, everything related. And I'm not here alone. I'm today here with Royal. How are you doing today?
GM. Yeah, I'm like always, I'm great. So what's about you?
Everything great here. Sunny days, starting to be hot here.
I feel it.
Yes, but everything nice. And we have many news this week. Everything looks like we are starting bear season. People starting to panic, but yes, many things at the end, many things going on, especially with all the things we care about, that is stablecoins adoption, real world assets in general, many institutions announcing bigger stuff. So let's get into it. I'm very excited about today's episode.
Yeah, same. Absolutely the same. So maybe we just share the first part. I think overall we all agree that the last 7 days were bloody again in the market. Most majors overall went down. Most of them like 3, 4, 5, 6, 10%. So was a bloody week. But yeah, I think maybe it's something which is not. I'm very interested in your opinion, to be honest, Aniceto. I just saw many comments. The bottom is near. Maybe that's something we also can talk about it a bit today. What do you think about it? But maybe.
I mean, we are in an interesting point in the market. Most of the coins going down. Hyperliquid, you see there, quite green. So Hyperliquid doing very great in terms of price action. And few other coins, and not much, but some of them, StablR also made some pump. We see some specific companies like Circle announcing that they are going to be also in a StablR blockchain. I don't know. They can hype it. At the end, it's just a weekly chart. We care more about the long term. Let's see. I mean, some people start to get a confirmation that the bear market is not done, and they are mentioning that probably we will see another leg down in the market through the summer. I am not sure. Nobody knows about it. We will be here watching. We don't give financial advice at all here, but yes, what I can say by myself is that I do a DCA strategy and keep accumulating at price I consider are good for the long term.
Yeah, I can just say same right here. So yeah, no pressure in that like relation, but still some red numbers again, but I think that's okay. Next one, just as weekly as always, the stablecoin market. Yeah, I think a bit down, like 0.65%, but yeah, nothing special. Tether just is dominating as ever. The whole market is a bit, like I said, some billions. I think 3 we went down, but still 320 on the clock. Yeah, overall, just I would say some interesting numbers as well. Like with Sky, there was a pretty huge spike with 6%.
Yeah, I think especially the yield-bearing stablecoin from Sky is getting a lot of inflows. So there is getting some traction there. And we have PayPal getting minus 13%. And I would like to mention, if you go back to the top, minus 6.6% looks like a very small percentage, but it's minus 2 billion. So even a small percentage.
Okay.
Yeah, 2.1 billion. So even if the percentage is very small, it's still 2 billions going out of the stablecoins market cap. But I mean, if you look the chart in the long, like you see here, is just a very good chart. If you need to see what's going on here, is that this chart is going up to the right, and yeah, for sure, it's many prediction that the stablecoin market cap is gonna grow a lot through the years, and we believe that is gonna happen, especially after legislations passing through stablecoins and many institutional players taking part of it. But yeah, let's see. Steady lads. This is the backbone of DeFi in general. Some of these stablecoins are not integrated at all in DeFi, and it's not the case of FRAXUSD, our favorite stablecoin, that we are getting more and more DeFi integrations or adoption. So yeah, it's interesting to watch the stablecoin market, how is playing through the weeks, through the years in general. I remember watching this chart in the period where it was going down, but so far, if this chart is going up in general, there is more liquidity integrated into DeFi, and one thing that we mentioned in previous episodes is also, it's not only about market cap, is the velocity of money, how these stable coins are getting used in the different DeFi products, borrow, lending, liquidity pools, swaps, the volume. So yeah, it's important not only take this like the metric of the stable coins is that the TVL, is gonna be many other metrics that matters a lot. Is how much these stable coins are getting real use for not only payments, but also about sending, investing, like savings, all these different financial products that we already know in traditional finance need to be translated into the DeFi world. So it's just starting, and we will see many of these. We used to talk about DeFi Legos. The base of the money bricks we are building is stable coins, and then we will build this castle of financial products where the base of it will be some stable coins. So yeah, interesting to see and watch these metrics.
Absolutely, and still we already see some different kind of bakings in already the kind of the currency. So what for me is like pretty cool to see, because just like I have some in my wallet, but yeah, BRZ, the Brazilian like currency is up again. I think last week it was also up like 10-20%. So they are doing a solid job over there. But I have also a question for you, because I am right now not very much. I didn't do my investigation like right there. In cases of Apex USD or APX USD. I think you are maybe a bit more familiar with it already, because I read much about it, and now I see, okay, it's on place 21 with a good influx in the last 7 days. Why is that?
Yeah, it's getting a lot of hype. This is, I don't know if you know about Strategy, the company of Michael Saylor, that they pretty much accumulate Bitcoin like crazy. And yeah, they release a new product that is about getting yield. Some institutional players or some big money doesn't want to have the volatility of Bitcoin attached to their investment. So what they release with this kind of product is to have, if you expect Bitcoin is growing at, I don't know, 13% every year, you can offer this yield to the investors without the volatility of Bitcoin. And you just get all this volatility and you offer the yield to the people putting the money in this kind of stablecoin product that is basically a credit. You are facilitating this money for a strategy, and then they will offer like a dividend, that this dividend will pay the yield that this product is paying. It's a bit complicated, but it's getting a lot of traction right now, I will say. And they are getting integrated in several DeFi protocols like Pendle, all these trenches mechanics that they are going out. And so far is paying quite big APRs. It's getting like, you can get a fixed APR of something like 12%, 13, something like this. I don't know how sustainable is this. I'm sure Michael Saylor have a lot of people working to design these products. Still need to be, I still don't trust it 100%. It's only about how times goes, how these products will behave during stress.
He's a businessman. It's true.
He knows what the big players want. Is just, I deposit dollars and you give me 10% or whatever it is. If you think Bitcoin is going to the moon, okay, you take the volatility, and I just want to get paid this rate of 10% or whatever is the number. But it's interesting. We should watch into it because it's getting a lot of attention.
Yeah, of course. I fully agree. I'm not, like I said, not very much into it, but still that helped right there. I'm just like starting right now, getting a bit more into Stretch. So even if it's a like traditional, I would say, product with some kind of tokenized versions, it's definitely interesting, and many people are talking about it. I mean, it brings eyes to our blockchain economy. So yeah, definitely, let's dig into it in the future.
So, yes, it's like many derivatives around it, but still at the end you need to investigate a lot what is behind the derivatives you are buying or trying to invest, because it can be dangerous as well for a whole DeFi if this collapse. So we don't want these knock-on effects and getting DeFi destroyed by this kind of looping strategies.
Credit is risky, so let's continue. Now it's your turn, because it's your wish. You wanted to introduce for this episode the Fear and Greed Index.
Yes, here is one of the metrics I introduced this week in the show is about the fear and greed index. Basically, is a conjunction of metrics that indicates the sentiment of the people in the crypto market. And this is quite simple, but is very effective. If you want to have a very simple strategy of when do you want to buy, usually you need to take a contrarian thinking. Once you see this indicator going into the red area, extreme fear in the market or whatever, it's usually a good opportunity to buy. This is according to the past. And when people is totally euphoric, it's probably time to sell. So one curious thing here, you see in the past months, I don't know if it was January or February, we reached the moment of maximum extreme fear in the crypto market in the history. So that shows that many of the people are not here anymore. They just give up. And
five is pretty low.
Pretty low sentiment back in I think that was what day, January or February?
Yes, that was the 6th of February. So
we recover the sentiment a little bit through the months, but let's see if we are gonna watch another leg down in the market. Let's see if the sentiments continue to the red area. It's totally possible. And yeah, I think this metric is important to follow because it's simple and easy to understand. When other people is totally in fear and panic, it's always good opportunities out there.
Yeah, fully agree. So yeah, I also do my DCA, as you already mentioned in the beginning, but yeah, accordingly to this like index, it may make sense to look at it from time to time.
Mm-hmm. So we can follow it through the weeks, and yeah, let's see how the sentiment is in the market.
Yes. So I think we can already start with the news. So we are finished with today's, I would say, metrics. So let's dive into it. So the first topic is about Tether and the government of Georgia working together because they plan to launch, or likely plan to launch, their first official stablecoin for the country of Georgia. So Aniceto, I'm asking you, what do you think about it? Is this huge for the space? And yes, if it's huge, why is that so?
Yeah, I think that's important. We see Tether, one of the biggest players on stablecoins, and here is a partnerships already starting with governments to launch their own stablecoins for a country. That's important. I remember Georgia is a country that they explore blockchain solutions for a long time now, but they already had this idea of launching their own stablecoin in the past, but it was not possible, I think, because they didn't allow them to do it. And I don't know if the timing right now is more positive about the stablecoins in general and getting legislation passing in different continents in the world, not only United States of America, but also clear rules for stablecoins in Europe, in Asia, in different countries. So they decide to go for it now. I don't know how big that can be. Georgia is not a big country. Also, it's not one of the richest countries in the world, but for sure they can improve their financial system with this kind of technology. And yeah, it's interesting to watch, especially with a technological partner like Tether. And not only technological, also they can put a lot of money. They make a lot of money.
They just buy Georgia.
Yeah, and Tether, they also have big relationship with other countries like El Salvador. They are established in El Salvador as well, but not sure if they plan to do something there in El Salvador as well. And it's going to be positive if we see different countries issuing their own stablecoin and getting that integrated in all their systems, in all their government procedure, taxes, everything. And of course, if you make your stablecoin, also it will be forex exchange happening on the blockchain, I believe. So if people start to trade the stablecoin of a country and they want to swap it for other stablecoins, that will bring some volume to the blockchains in general. And yeah, I think that's another sign of adoption of stablecoins getting bigger.
Yeah, absolutely. I tell you what I see. I only see the next pairing partner for frxUSD, because you just mentioned the FX pair, and I already see it before my eyes, like in Tether Georgia stablecoin paired with frxUSD on Polygon on Curve. But yeah, that may be something for the future.
Yeah,
great.
I'm not sure how big the volume is going to be, or if there is demand for the stablecoin of Georgia. But yeah, for sure, it's going to happen.
Yeah, let's see. Let's see. I think we can directly go to the next one, because we have definitely some topics for today on the line. So next one is SoFi. I will just read it out. SoFi just became the first national US bank to launch a stablecoin to its entire user base that is one-on-one redeemable for USD. This is a fascinating story, but pay attention to the fact that SoFi offers a stablecoin and a tokenized deposit side by side. So definitely something interesting. I looked definitely twice, because at first I had to understand what was going on there. Maybe you can clarify this whole situation a bit. What does this whole concept of like launching a stablecoin and also a tokenized deposit mean? What does it mean for the usage, the daily usage for like DeFi users, for the users of SoFi at all? Maybe you can clarify that.
Yeah, well, first to mention that there is different levels of bank license in United States of America. In this case, what is important is this license is from a national bank. So this is important. And then the mechanic they are using. So this bank already have many users, many people already using their bank. I am not sure how many users they have. But in this case, there are this stable coin is backed by tokenized deposits. Tokenized deposits means fiat money that is deposited in the bank. You can tokenize this, and this is you can mint the stablecoin because it's backed with more deposits. This is a bit complex system, because people can just withdraw deposits from your bank. And so how is the mechanics? Do you have to burn? You need to burn stable coins if you get less deposits in your bank. So I don't know how they are doing exactly in the technological side, but you need to constantly monitor what are the deposits you have in your bank, and have the same amount of a stablecoin issued by your bank. So yeah, it's interesting mechanic. There is many controversy when we talk about tokenized deposits, because it's very difficult. You need to be 100% sure that these deposits are there for people to withdraw the money from the bank. So you don't have like the treasury bills, for example, is another collateral type like FRAXUSD is using. These treasury bills are generating yield. There's debt from the United States government, or it can be other countries' debt. But in the case of tokenized treasury bills, is a bit different. This strategy of tokenized deposits is a bit more complex, let's say, and I'm not sure if this stablecoin from SoFiBank will be integrated at all in all the DeFi world. Like in the case of frxUSD, the stablecoin from FRAX, we see that it's integrated in all DeFi mechanics, and it's gonna get more integrations in all the borrow, lending, everything. I don't think this stablecoin will probably go in that route, but they are playing a total different game. They already have customers and they already have distribution that we mentioned is very important. I am not sure how big it's gonna be this stablecoin, and if it's gonna be Genius compliant. Probably yes. Deposits in a bank are, I think I need to double check, but it should be one of the collaterals that is allowed under Genius Act legislation. So they can probably comply with Genius Act in this way of building a stablecoin. But I don't think it's pretty DeFi aligned, this kind of design, let's say.
Yeah, I think so too. I think that's also something in the past when we talked about, like, just also I will add some opinion there. When we talked about USDC or also some parts of USDT, yeah, which are backed by fiat and bank accounts, that is not the original, I would say, vision behind all that. And yeah, as we are DeFi enthusiasts, we want to see the capital being tokenized, and at best we have some kind of BIDL WTGXX fund, whatever, which is backing our dollar unit or whatever unit. But still, pretty interesting. Thank you for that.
Yes, this stablecoin you can redeem into these tokenized deposits. So at the end, you can be safe, let's say, like you are, this stablecoin is representing deposits in a bank, okay? But in the secondary market, like it's gonna be very difficult to maintain the price of $1 in the secondary market in liquidity pools and this stuff. So let's see, we can follow this in the next episodes, how it's going, how it's growing. And it's going to be interesting to see different mechanics playing.
Yeah, absolutely. So I think next one. Yeah, maybe you give us a little intro here.
Yeah, here we have one new, is Scott Bessent, the Treasury Secretary, is talking about CBDCs, and is totally against it. He's telling that with this government, with Trump administration, it will not allow US CBDC. So I don't know, there's a lot of controversy here. Like people think, or the narrative here is the CBDC will be a stablecoin directly issued by the central bank, so they can have full control of who is getting this money, what is the use of this money. Some people are concerned that there is a lot of control if the CBDCs get implemented. To be honest, we already have a lot of control in the actual financial system. I don't think it's going to change too much. Yes, of course, it's going to be, if you move this CBDC into a blockchain, every step can be recorded, all the history of the movements, and every person will be tagged with which wallet is yours, all the different movements. But if you issue a CBDC, you are killing some of the intermediaries here. You don't need a commercial bank. If the money is directly issued by the central bank, then you are killing one of the players in the in this financial system that is the commercial banks. And yeah, I don't know. Here, I think it's more like a marketing marketing thing about Trump administration telling, "Oh, we protect the people. We are not allowing this to happen."
Yeah, it may be directly that, but yeah, like you said, I'm a bit more. I would say for myself, I'm a bit more concerned because it may be not the biggest difference, but I think it will be definitely slowing the whole process of like whole on-chain evolution down, in my opinion. Because like the degens, the people who love DeFi, the people who are mainly pushing the space forward, or many of them. I think they won't be a fan of this, and that will be a big reason because, I think that could be something which just stands in the way. But I just hope it doesn't happen, and hopefully Trump is holding his words there. But let's see.
Yeah, let's see. There is many crypto people that are against this kind of CBDCs, stable coins, let's say, because the concerns about privacy, about the control of the states, the governments in the people, if they control the money that they already do, more or less, they have big power to the people, let's say. And also these CBDCs, they have the possibility to be programmable. So it's you can insert logics inside the money, like, I don't know, a part of freezing the money in your bank account or something like that. It can be, if you trust them to do whatever they like, they can probably make some Keynesian dream, like, I don't know, you need to spend this money before that date, or if not, it's gone. Something like this to stimulate the economy or stuff like that. It's a bit dystopian, but yeah, it's totally possible. Or let's say, for example, if you are buying some stuff that the government doesn't approve, or you can be enforced, or you you can, I don't know, lose some points of good citizen, like you are buying too much meat, or you are taking too much planes, or you are spending too much in petrol, fossil stuff, energy, or whatever is going on. So yeah, at the end, people are afraid because you give permission to the governments to do whatever they want with the stable coins that they are issuing in this way. So yeah, I don't
Dangerous.
think
It's definitely dangerous, I would say. Yeah.
Yes.
Some wise man once said, it may be enough power already, but yeah, let's see. Next one, I would say. I think this one is definitely huge, 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 huge. Cash App now enables USDC payments on Polygon, Ethereum, Solana, and Arbitrum. So definitely something we need to talk about.
Yes, I don't know. I am not user of Cash App.
Me too.
I'm not using it. I don't know how many people are using it.
I can tell you. It are, I think, 56 or 57. So maybe we both don't use it, but some people are.
57 millions.
Yes.
Right, that's a big number, right? And we see people using these apps. This is probably a fintech app, or I don't know, something similar to PayPal or stuff like that for payments and stuff. If they are integrating stablecoins, that means all this amount of users now, they have easy access to pay with stablecoins or to convert their fiat money to stablecoins. So at the end, this is how adoptions looks. It's like people that doesn't need to care about a wallet or a blockchain, gas fees, or all this kind of complex stuff. For some people, they don't need to care about it. They just can have, okay, this is my handle on Cash App or whatever it is. send me some money, I send some money to my cousin, and I pay the coffee in the shop with this app. And this is how you get more adoption, by people don't realize they are using stablecoins and they are using it. So bigger step to adoption, and I hope is one of the apps of many more coming in the future.
Yeah, absolutely. And I think for me, besides the just huge distribution like Cash App is bringing to the table, for me it's just like very, very nice to see Polygon like very frequently in these kind of, I would say, yeah, definitely big topics, big like adoptions for the space, because yeah, Polygon is now doing the good work in kinds of stablecoin payment rates, etc. So yeah, very much because they are good with Frax Finance. That's also something I like them very much. But definitely, yeah, big words and yeah, big actions right there.
Polygon doing a good job, very focused now on payment systems. And yeah, in this case, is a same that USDC is the payment solution here. When if you integrate frxUSD, you will probably, all the users of these applications will have extra benefits in form of the yield of the treasury bills backing the
frxUSD. Better cashback, like better returns on balance, yeah.
That will be huge to see in the future. Not only payments and all this, also getting these. Well, you know that Genius Act stablecoins, they cannot pay a yield, but
not directly.
Not directly. So it's gonna be some cool mechanics. Let's say what we are able.
Some kind of fancy program reward system.
Whatever happens, at the end, the yield is gonna pass to the client in some forms. Still, we will see if there is more creative ways or less creative ways, but the yield must flow. This is people. If one application is doing it, okay, people will see. Okay, so I put my money here and I'm getting 3.5%, but I'm not getting that in other apps. So yeah, this is still quite early of these incentive programs, how they get integrated, how the yield get distributed to the users. But it's something that is going to happen. Let's see how this plays out at the end. Still, Clarity Act legislation that we mentioned in previous episodes is not fully passed, and this opportunity is using the Clarity Act legislation to modify this yield on the Genius Act. And one of the things that is going to happen is how the different stablecoin issuers are able to translate the yield of the treasury bills underlying the stablecoins to the different fintechs apps, to the users using the applications. So it's going to be interesting to see how this play out.
Yeah, absolutely. I just can fully agree on that one too. Yeah, it makes me definitely bullish, like I already said. Hopefully the next integration for Cash App is definitely frxUSD. You already said it. But yeah, let's see. Next one. Yeah, it's an interesting topic, I would say. It's much about, okay, yeah, what does good liquidity cost? What does it cost to incentivize this liquidity? Yeah, and here's some like example with the PYUSD from PayPal. Maybe you can drive us like there to a bit more deeper into the materia. What is happening there and why is it so expensive? Why is it like that?
Yes, well, here there is a chart in the tweet explaining how much they are spending to keep the liquidity on chain. I remember in the early days of PayPal stablecoin, it was a FRAX team was helping them to set up all the liquidity pools in Curve, how to bribe, how to get liquidity into the pools and make the deep liquidity. And yeah, but this is not free. You need to spend money to get some people providing liquidity into the pools. And here we are watching how expensive it is to maintain this liquidity on chain. In this case, we see about 2 million in fees to Sparks.fi in the first quarter to maintain the liquidity pairs with other major stablecoins. If you annualize this metric, it's going to be like 10 millions spent in liquidity fees. So yeah, that's to give you an idea of maintaining liquidity on chain is expensive. It's not for free. And when you see these huge pools in Curve with many millions on it, you need to incentivize these pools to maintain the liquidity sticky. And yeah, we can mention later about the peg keepers strategy that Frax is doing to make it more sustainable. But yeah, just be aware that this is not for free.
Absolutely. I just was thinking that. So like in the future, if you like to the viewers, if you from now on see a new frxUSD packkeeper integration or something like that, just remember like the incentivization of this whole thing is very expensive. So be grateful that they are there. Yeah, I would say very good explained. Yeah, it's definitely something the companies, most of them, I would say, just need to be aware of that. So if they want to do something on chain, it may be a very cool solution to go, with a white label, like already distributed stablecoin, because building up own liquidity and going I would say definitely more complicated route, I would say. Maybe not it every time. So depends.
Mm-hmm. Let's move to the next ones. This is getting interesting here. We have some interesting news about Aave V4. You see, like Aave Pro is the same thing as before. And early this week, it was some proposal coming from the Aave itself, well, the risk management institutions managing Aave, to increase the caps of the two different stablecoins. In this case, it was for frxUSD and USDG. Both were at 10 million cap, and it was a proposal to raise these caps to 20 million each one. These two stablecoins are incentivized right now. In the case of frxUSD, for depositing on Aave V4, you are getting paid like around 7%. That is pretty good for a very safe stablecoin. And for USDG, is also a bit more. I think it's close to 8% for supplying the stablecoin on Aave before, and they go very fast. If we move to the next episode, the next tweet of the Aave, we see in the case of frxUSD, it gets filled fully now. You cannot deposit anymore. The 20 million cap is already reached very fast, as you can see in the chart. It's interesting. It was already 10 million of frxUSD already in Aave, and once the cap was raised, it was pretty fast. Didn't have the chance to deposit there because it's already filled, and it's logical because if you want to borrow right now on Aave V4, you can pay probably something between between 1 and 2% of interest by borrowing. And if you deposit frxUSD, you are getting 7%. So it's just easy maths there. You can borrow at 2% or whatever it is, and you supply and get paid 7%. So far, incentives are there. So this is okay. It's gonna be sustainable if the full yield of frxUSD is 3.5%. In this case, there are some extra rewards incentivizing on top of that, because frxUSD want to be important part of the new version of Aave, and we are getting there. We are so far the biggest stablecoins that is available on Aave, and I like this a lot. Aave is one of the biggest, DeFi protocols in general, and it's pretty cool to see frxUSD having a very good position in this new version of Aave.
Absolutely. I already also like always don't have much to add here because you already summed it up very, very good. But yeah, I just looked it up. It are right now apparently 0.8% borrow APY. So even less than you said, since you said 1 to 2. So yeah, huge opportunity to just borrow some frxUSD right there.
Yes, if you manage to supply, you get also the cheap borrowing rates. And
I didn't do it, so yeah, maybe some other person out of the FraxForce did it.
We need to be ready once we see the next raise of caps on the on the announcement of Aave. We need to be ready because that goes so fast.
Yeah, definitely something. So we need to rate it. We need to just put it into the FraxForce group the next time and then be added when it's time. So
I think we are ready to raise again to 50 million or something like that.
Yeah, I think so too. Maybe even more. Why not 100?
Yes. I don't know. 10 million go fast, 20 million go fast. Let's go to 50 million.
Yeah, let's try it. At some point, maybe we can't slow it down like this. We just keep increasing. Okay. Yeah. So next one is pretty cool because we have someone performing like crazy right now in the FraxForce. The person is DePanther, and he is writing pretty cool articles, in my opinion. And yeah, also he apparently right now he gives or gets definitely great credit for it. And he also wrote an article about the current situation with frxUSD and Aave, which what is going on there, the whole development over the last weeks. And he also made some conclusions about the whole, I would say, stepping forward for DeFi. And yeah, maybe you have also some words about that, but in my opinion, it's definitely a great add-on. And yeah, directly to you, DePanther, you are doing a great job. Just continue that.
Yes, kudos to DePanther that is doing great post on X. So follow him, give some love, some likes and retweets to him. Here is a very nice picture also about Sam Castimian and Stani taking a picture together and representing the DeFi protocols there. And yeah, I think this is a pretty much DeFi will win partnership, and they understand very well all the mechanics behind the stablecoins, borrow lending, and pretty much two of the biggest DeFi brains I can think about. Great match.
Nothing to add here too. So yeah, I very much agree. I think on one of the first podcasts I listened from Sam Kazemian, and it was also something I think which was joined from Stani. Yeah, I think that was the moment where it clicked for me. Okay, both very smart dudes, and they are already working together. Yeah, maybe that's an interesting thing they are working on. And yeah, turns out it was.
Yeah. We left behind all the food that was in the early days of Aave before, with some controversies
Oh
there.
man, I think it
But
was very undeserved, to just say it out loud, because I think the most FUD went against the risk first approach. And man, how dumb is it? In my opinion, how dumb is it to, like, in the early stage of a new lending protocol, how dumb is it to FUD an early, like, a risk first approach? When I'm a holder of Aave, when I'm a user of potentially Aave V4, the thing I want to see is definitely a risk-first approach, in my opinion. I don't want to see all go in, let's like raise the caps to 1 billion in a matter of days. That's nothing I want to see as a user and not as a holder. So yeah, in my opinion, the FUD was very undeserved. So yeah, just to make it short.
yes, I mean, some of the critics was fair about the new architecture, the new design, or whatever. Maybe you don't like it. Okay, we need to understand that we are entering a new era of DeFi, where many institutional players and many real world assets that are gonna come on chain. So things that were not possible before will be possible in Aave before. Like, I don't know. Was a very good article. I think it was Stanley writing it about different investments, very bullish on solar energy, very bullish on things that are coming for the future, energy production with solar panels that you can, if you have some source of yield, let's say, you can translate this yield to the DeFi world with this new design. And it was not possible with the actual architecture of Aave v3. So for a new era of DeFi with institutions with real world assets, you need to change how the borrow lending is designed. And yeah, so far we started with caps. That means we are starting to try to see how it works. If there is any problems, there is no problems, we keep raising. And with the time, we will get this Lindy effect, let's say, through the time, and nothing happens wrong. It's supposed it's safe. And I am pretty much, I think they pass all the security risk assessment and everything that many people is looking into it. So yeah, they are pretty much, they have a skin in the game. They know how important it is to be safe. Security is one of the main concerns when you are building DeFi. Even I read one of the founders of like Michael Egorov from Curve, you know it. He was tweeting the other day, "Oh, I wake up like a nightmare. Like
Yeah, I saw it.
like it was a bug in my code, so I was panicking. Go to the screen in the computer." So this is how a DeFi founder lives. Like they are obsessed. They are obsessed with security, with the code they produce. So they know how serious it is. And imagine you are creating a code that there is so many millions put into the code you are pushing and deploying. This is a big responsibility. Of course, this is not only one person creating these protocols. There is many different people, many different teams with different perspective, with different views. And of course, they try to break it in so many times, so many things. And yeah, it will be some of the news here. We will talk about safety and things that happens in DeFi. That always happens, but we are talking about top elite design and DeFi protocols. So hope is safe.
Yeah, absolutely. But I think, yeah, it was definitely a laugh. It was definitely funny to just like I couldn't see like in just from before my eyes. I just could imagine how it looked like Michael just rushing to his PC and wondering, oh man, is something wrong with core finance? But yeah, definitely something. Next one would be also something, we definitely already talked about very frequently, and it's the growth of the packkeeping pools of frxUSD. And right now we hit the 1 billion in trading volume on Curve. So that's definitely a big milestone, because right now we are like the first packkeeping pool got deployed on February. On the beginning of February in 2025. So 25 plus packkeeping pools deployed in over, or like in under 1.5 years, roundabout. And I think it's very huge. So it's definitely very much proves, okay, there is usage, there is volume like flowing through it. And yeah, we just like getting the packing pools getting added on. So it's definitely an ongoing process, I would say. And the FraxForce, for example, is definitely a big fan of it. And yeah, so maybe you can just provide the whole thesis, or maybe or your personal thesis, just like another time. Why are packaging pools very important for overall liquidity, and what do you think of it?
Yeah, don't want to extend too much into it.
Maybe not too much, but just for the viewers to get like a
yes,
little bit of feeling of why it's important.
Yeah, basically, what we are watching is many different stablecoin protocols, especially on DeFi, choosing frxUSD as the pair to have the liquidity. This is why. This is because Frax is offering a sustainable way to maintain this liquidity in the pools. So Frax offers the underlying yield of the treasury bills in frxUSD to incentivize the liquidity. And for pools that have a couple of millions on it, that's we were watching how expensive it is to maintain the liquidity. So you are getting this sustainability with the yield of the underlying treasury bills through frxUSD. And I like this article that Frax posted. Is explaining all the backkeeper mechanics. It's like a thermostat. If you are an engineer, you will probably understand how it works. Once the price of the stablecoin is over $1, you are minting more of the stablecoin to maintain the price to $1. Once the price of the stablecoin go under $1, you are burning stablecoins. You are taking out from the pool and burning a stablecoin, so you make it more scarce and the price go up. So this is a very cool design. It's like a new form of flywheel, more sustainable, and yeah, it's many more projects joining this backkeeper narrative, and it's gonna be one of the narratives in DeFi for the coming years, how liquidity gets sustainable through time about these mechanics, because the other projects, not only Frax can incentivize it, the other project can also put incentives as well. And yeah, this is one of the safest ways to keep your liquidity on Curve with frxUSD as packkeeper choice. And this is the superior packkeeper. Go through the article if you are interested on how it works. Is all the details are there, and especially if you are a DeFi project, and you will understand how this positive sum win-win situation is happening if you choose to pair your stablecoins with frxUSD.
Yeah, great summarization, I think. Yeah, absolutely. I think after the stream, I will just put some of the main, I would say, main topics from today, just in the comments, so the people can like look into it themselves. And also I will put like in there the Frax Finance article, so the people can express or like get more into the whole superior packkeeper topic. I think that's something, which can be useful for the future. So
Yes, and I just highlight here the comment of Captain that is not here today. Maybe we see him later. He's saying we need more productive liquidity, but nice numbers. Yeah, this is what FRAXUSD is about: productive liquidity getting used in all these DeFi protocols. And yeah, let's go into the next one because it's related to this. How we are getting another brick up into this Money Lego that we are building is about Tangent. Tangent is a project that is launching just this week. They are in the pre-deposits and now they have their own stablecoin, USG. And what is happening here is we see that these backkeepers are LPs on Curve, and now in Tangent, you can deposit these LPs as collateral and print this new stablecoin, USG, against your collateral. So at the same time that your LPs is with liquidity, allowing the swaps to happen, generating revenue in form of APR, incentivized with CRB, incentivized with the yield that FRAXUSD is getting. And then now you are on top of that, you can borrow money, and then this money you can use it to generate more yield and do other stuff, whatever you want to do with it. And yeah, I think that is very good to understand how these bricks of DeFi are getting one after the other. And I think they are doing a good job, Tangent guys. And yeah, pretty excited to see how this develop. In this case, in this announcement, there is a market maker, Cicada, that is helping to provide liquidity into this protocol Tangent. So pretty nice to see these protocols getting built one on top of the other.
Absolutely. Like for me, I think it's quite obvious, but as a much bigger newcomer to this space than you are, because you are been here since ever. Yeah, it just it's pretty interesting because right now I'm pushed to understand what is possible with just the money Lego we are given in DeFi, and just with sustainable or still sustainable methods, what is possible to build out. And it's definitely something for myself. I just have to dig deeper, because when I just think about it, okay, I can provide LP, and we already talked about it earlier today. And one of the potential, I would say, doings is, or maybe just solutions is, I provide my collateral, and then I a loan against it, and my collateral, which is an LP, is paying back the loan. I think that's just beautiful, to be honest. Yeah.
Yes. So you can use the rewards you are getting in your LP to pay back the debt you are getting. That's a cool thing. It's nothing new. That already it was some projects already doing that, but yeah, it's beautiful here how it's done. And yeah, let's see if more people understand these mechanics and if there is demand for it. For sure, I think many of people in traditional finance will understand these mechanics and will probably use it. I don't know. This is not many institutions are playing these games. Like this is too risky for them or whatever. But the reputation of crypto is changing, is shifting. Even if so many things happens with the volatility, crazy casinos out there, we are talking about other game here. It's stable coins. Okay, we monitor how to peg the stable coins to $1, how important is liquidity. We are talking about a total different thing. This is not pump.fun. We are talking about real financial products built on top of each other. So yeah, I hope this get traction, adoption, and we see more money flowing into these mechanics.
Yeah, I think that was a good transition, or like some good words for transition, because now we can just like get over to the next analysis from Chavanda, because like the last weeks, he again prepared something for us, a little market analysis about the last 7 days. So I think we can just switch over and later comment on it. Or what do you think, Aniceto?
Yes, let's go to see the Charmander video. Always, you need to understand Charmander is a great chat, very deep into trading markets. So let's hear about the price action of the last week and see what's going on. That is, spoiler, we are not very great in terms of FRAX price, but let's see if we are respecting the support levels, what's going on with the video analysis that we shared previous weeks.
Absolutely. I won't leave time on the line, and let's directly start in.
Hey guys, happy Friday. Quick market update today. The theme of the week is psychological support loss and the higher time frame support under test. Starting with Ethereum. Last week, we discussed the rejection from the major overhead resistance zone around the weekly EMA 20 and the 2,500 gap area. Since then, Ethereum has continued moving lower and now is consolidating around $2,000 region. Structurally, Ethereum remains below several key weekly moving averages, suggesting broader market risk appetite is still relatively constrained. The market is attempting to stabilize here, but no major structural shifts has occurred yet. On the FRAX side, the market largely followed the roadmap we outlined last week.
Or do you want to say something about the actual ETH situation? Because for myself, I can just add, because I don't have many words about it, I just had a little long, and this long doesn't look good right now. I just can tell you that. That's all I need to say right there. Yeah, like to the viewers, don't play with leverage.
Yes, I mean, it doesn't look too good, the Ethereum chart. Let's see if it respects that level, the previous low level, but it doesn't look good at all. Yeah, it's pretty much, you need to be conservative at these levels. And markets are not looking very good in terms of price action right now. So I recommend always spot.
I can just agree. Let's just continue.
In Market Pulse number 19, we discussed the importance of 40 cents, the psychological support level, and highlighted a simple trigger. If lost 40 cents decisively, then continuation towards 38 cents. That scenario has now played out. Price broke below the psychological support area and moving directly to the higher time frame support zone around 38 cents. What's interesting now is that we are approaching a major decision point. The previous support structure around 41 cents has already been lost. As a result, the market is now relying on higher time frame support to stabilize. If buyers can successfully defend the 38 cents region, FRAX could begin building a base and attempt a move back towards 41 cents resistance area. that will be the first signal that selling pressure is starting to ease. However, if the 38 cent support fails, the next major downside target sits around 34 cents. So, from a structural perspective, this is no longer a resistance reclaim story. It's now a support validation story. For now, all eyes remain on the reaction around the current support zone. How price behave here will likely determine the next major move. We'll keep updating as the structure evolves. Thank you for watching.
Thank you,
Thank you so
Charmander.
much, Charmander.
Yes,
Absolutely.
I mean, we are fighting there, this level of 0.38, and it's going to be, if there is some, we are watching the price getting some reaction there, but I don't know. If we broke it, I don't know, he mentioned other area in the downside, but there is no big price action that make this a support or whatever. We will discover like a new area of all-time lows for FRAX. So I don't know. I just keep my mind like I can accumulate more of this token that I think will do good in the future. Let's see, not financial advice at all. But yeah, it's pretty much painful if you are a holder. But I try to think positive. I can accumulate more of this asset, and this is how I take it.
Yeah, just to give you a little outlook how our FraxForce Discord server looks like, because you pretty much described it right there. But you are right. You are definitely right. I would describe it like that. On the one side, you have the, I would say, conviction buyers like we are. Yeah, we are just buying spot. And on the other side, sometimes there are the leveraged people, which are right now a bit not too loud, I would say, maybe because of the recent price action. But yeah, so I definitely agree. I hope, just for the sentiment, that we hold on, or better, we rise again. But yeah, for now, I think it's, yeah, I would say it's fitting, because the situation right now overall in crypto is just, for me, it's not understandable. I mean, I see FAT on Ethereum every day, and I just think, man, did you all not got proved all along? Because so many points speak, just in the cases of Ethereum, speak for Ethereum, and the people still say, oh no, Ethereum is dead, or whatever, DeFi is dead. And yeah, I think it's not true, and I think we are just like you said, in a bad sentiment. And yeah, maybe the world looks whole different in some days, weeks, months, I don't know.
Yeah, how it feels is here at a total dislocation of the news we are watching and the price action. So we can talk about fundamentals, and the fundamentals are very positive in terms of FRAX, getting partners, big institutions in play. Everything is positive regarding stablecoins adoption. The market is right. Stablecoins are going to be a big thing. And yeah, we are positioned to be one of these players. Like, it's going to be integrated everywhere. We are capable of this. And also frxUSD to be the stablecoin that is deep integrated into DeFi. And yeah, if everything goes well in terms of adoption of the stablecoin of FRAX, then it's supposed that FRAX is going to absorb the value that is providing. So this is the fundamental part. And then we have the technical analysis part that doesn't look very good. You see this chart and it's not very positive. But it is what it is. The liquidity for FRAX token is not very deep. So I don't know if somebody start to buy in big big quantity, the price can go up very quickly as well. But so far, we are here in the long term. You see our conviction, our motivation as FraxForce member, doing this during the worst periods in terms of price action.
Every day, yeah.
We keep learning. There is nothing we can do about it. And yeah, I will keep supporting Frax because I like what they are doing. I like their values, their approach to DeFi in general, in this positive sum approach with different protocols and projects. And yeah, this is how I see the things, but I can be wrong.
Yeah, absolutely. Like, just to get some opinion of mine also to this scenario you described there, I just think, and I made like a recent post about it, and I think it's just fitting in cases of Frax. Frax just feels like one of these uncommon bets you need to make parabolic like growth, or in general money, financially opportunity you take. And I think it's normal because we already talk about it so often. It's something like for us, it's clear, or it seems to be clear. Maybe we are at some point maybe a bit too euphoric, but overall, I think we are not wrong. And that's important because the whole stablecoin narrative we already talked about so often. It's very big. It's definitely deserved. But also the positioning of Frax itself, it's pretty uncommon. It's pretty special. And I think it's a very, very normal and fully understandable take to say Frax is definitely massively undervalued. And we already see many assets right now which are undervalued. And you can say Ethereum, Bitcoin, whatever, is all undervalued. It may be right. But if you see where Frax once was with the adoption back then and what they now provide in a much more advanced and like also in the regulatory area, much more advanced scenario, I think it's crazy undervalued because the picture is much more clear than back then and still. But yeah, let's see. I don't want to talk about
but what I call an asymmetric bet.
Yeah.
Okay. You are taking risk. The potential of the upside is also there. Markets are volatile. Do whatever you can with this, but yes, I will put it like an asymmetric bet here.
Yeah, maybe I was a bit too biased, but yeah, absolutely. I think it's like that. So yeah, let's continue to the next one. We have still some things on the line we want to speak about. So next one is from Carlos Domingo, the CEO from Securitize. Yeah, which is presenting something which seems to be very similar to frxUSD. Is it like that, Aniceto?
Yeah, pretty much. Here they are announcing Banek is a well-known institution in traditional finance that is tokenizing treasury bills, and then they are putting these tokenized treasury bills into Euler Finance, that is a borrow lending market. So yeah, pretty similar to what FraxUSD can provide in Aave before or something like this. But they announced it like is something important that traditional collateral like treasury bills, they can be put into DeFi. Okay, yes, we know this can happen and will happen. And FrxUSD is an example of that. At the end, FrxUSD is backed by treasury bills, and you can say that it's very similar to put FrxUSD as collateral in a borrow lending market.
Yeah, like just for me, just for you to know, I don't have anything to add here. I'm just very, very interested what you think about it because like I said, I'm bullish on frxUSD, so I'm looking very focused on everybody which is coming their way. But let's just like we already said to some topics today, we will watch it and maybe we'll review it again the next weeks, I would say.
Yeah.
Continue.
So, yeah, let's move into the next ones.
Yeah, because we are already 1 hour and 20 minutes live, so
Yeah, this is becoming incredible long. It's gonna be the longest Onchain Ca H episode we make. We need more. I don't know. This is gonna be longer. I don't know. Let's try. Maybe it's the best one. Here we are watching one new about Canton Network. It's a blockchain we already spoke about. A Canton Network is a blockchain backed by many institutions, focus on privacy and focus in, well, all these institutions are big banks, big investment funds and all that. And here we are watching that they are doing a bridge, let's say, where you can transfer base assets to Canton Network blockchain. In this case, one of these base assets is frxUSD, that you can now, using this bridge, pass frxUSD to the Canton Network. And yeah, we see here one application built on Canton, Send, is like a fintech app. Is the one that is doing this new bridge connecting. And it was one new in the past that Frax was involved in the issue of the stablecoin of the Send protocol. So yeah, pretty much Frax getting integrations on the Canton network. Let's see. There is not very popular Canton network in the DeFi and crypto natives, but yeah, I think it can be huge regarding the different partners and the big players that they are supporting Canton network.
I think it's coming, to be honest, because there was some, like, shame on me, I don't know his name, but there was some kind of founder out of the Canton area, which is now putting videos on X about Canton and like explaining and just showing around. But yeah, overall, you are right. They are not, like, you already explained it to me back then. That Canton is like a not very DeFi related chain, but still is very well connected to institutions and in general big players, and has a has a pretty huge use case with its like privacy first approach. Overall, what is for me pretty interesting, that Base is the chain which is connected to Canton. I think that's something for me, which I'm very interested in, because I like Base as a chain itself, and I also like the community. I also like the whole economy on it, I would say, because I would just think much stuff is happening on Base, and there are many, I would say, reasons to be bullish on Base. So yeah, just the setup I enjoy looking on, especially when frxUSD obviously is involved. But yeah, I think that could be something for the future to speak more often about it, and maybe at some point I will use it myself in the next weeks and tell you about how frxUSD is behaving in my wallet.
Okay. I'm waiting for this video.
Yeah, let's see. I just have to go look into it first, but I think it's definitely something which is definitely interesting. And just to get the feeling how the private version of frxUSD feels like, I think it's definitely worth a look.
Yeah, I think we are starting now with the food section. The food.
Yes.
But
start the pot.
I think we are talking here for so long. We need some revulsive here. So let's get into the show to someone you are already familiar. Let's welcome to Captain, and let's start with this area of food. And yeah, let's welcome Captain to the show. Hey, Captain, how are you doing?
GM, not on the keyboard, but hope you can hear me.
Yeah, just fine.
Yeah, we can hear you
Cool.
clear.
Cool.
We can hear some birds in the background. So
yeah,
totally fine.
To be honest, it's some I don't know how to. It's this helicopter paraglider stuff, you know. It's pretty crazy to look at. So yeah, It's pretty funny. But I heard most of the show from the audio side. So yeah, I could have flooded a lot news potentially, and also had to say some stuff about some news. But yeah, I'm happy to be here for the rest of the show. I think we need to turn on the nitro a bit because you guys are 1 hour and what?
Yeah.
20
24
minutes.
minutes. Yeah.
I mean, the crypto space is that boring. So we have just Hyperliquid doing some price action. There's nothing else. One thing to mention, maybe, what comes to my mind, you saw Hyperliquid and StablR pumping. StablR got the same integration like Layer 0 got with DTCC. I think they choose StablR for their operations. And I think that was the reason why they pumped that much, by the way. So there is only Hyperliquid and some StablR Loomis pump. So I think it's okay that we talk that long.
Yes. So there is not much to do in bear market. So let's get into this food news. We have one crazy depeg on a stablecoin backed by the euro. This case is a stable euro, and also the USD version also got depeg. It got exploited pretty much. 10 millions got drained or whatever happens. Not sure about the details, but both depeg by over 20% with this attack, and yeah, pretty much a bad show. So
do we know the reason of the depeg? Is it something got minted, or is it a baking redeem problem? What's the reason behind it?
I didn't go through the postmortem, to be honest. But
yeah, but I'm getting tired of this news, to be honest. I mean, it's probably something everybody gets tired of. But that's the reason we have this people baking, RWA baking, real world baking. It's just like that. You have this baking on the one side, and yeah, there can't not much can go wrong besides some technical incidents. Okay, but you can probably roll it back, and I think that's a missing part. I think this DeFi discussion currently going on X, is this DeFi, is this not DeFi? I think we are not that adopted yet because we are too DeFi, because hacks can happen, nobody can reverse anything. Don't get me wrong, I don't want that someone can blacklist my funds or whatever, or reverse a transaction I made to a friend. But to be honest, to getting serious and getting big institutions involved, there needs to be a switch or some support you can call. You know what I mean? Even I don't want to say this. You know, it maybe harms my reputation as a cyberpunk beginner in this space or something like that. Even though nobody knows how I started, maybe, but. I joined this space also because of Bitcoin and Monero and early days of Dash and running Masternode the early days. So don't get me wrong, I love this vision, and I think there is a need for a niche of tokens and projects to provide this sensor resistance and whatever specs and benefits. But getting serious now, I think it's needed that we just move on from this real DeFi. You know, in the end, it's always a human behind it and a decision. And I think nobody would be that. I mean, we call for blacklisting functions from Circle and Tether. On the other hand, nobody wants blacklisting. So, yeah, just some rant from my side.
Yeah.
Okay.
Totally understand this. Like when a big exploit happen or something like this, and you are able to recover the funds, even if they will say, oh, but this is not decentralized or whatever. If you are able to get the funds and give it back to the users, okay. Even we understand that immutable code in protocols is a better way to do it. And yeah, sometimes we want to be safe. We want to these things to don't happen, and if they happen, to catch the people stealing this money and return it back to the users. So
I think rails like Curve, Aave, and Ethereum as a chain, and assets like ETH, BTC, and also native
Zcash.
token from native token from projects overall
Mhm.
should be sensor resistant, should be no blacklist function whatsoever, and should be free to trade, free to share and also free to acquire from everywhere of the world. But when it comes to a main world currency like USD, and we want that this gets treated like a legal tender and real cash, like a real bill, one frxUSD is $1 in cash. Then I think we need to get rid of this mindset of sensor resistance and decentralized. You know what I mean? If it comes to the rails, I'm totally agree, and I needed to adapt my thinking here a bit because we tried it 7 years or 8 years on the other way, and now we see more adoption we ever faced. I think that's the right way. And just to be clear, just the dollar level needs to be more, I would say, decentralized or centralized, basically. And the rails are okay to be central resistant, immutable, and so on. I think there is a need for everything, and we will see apps and dApps for everything.
Absolutely. I mean, I fully agree to everything you just said. The only thing I want to mention is because you mentioned, the current discussions about Tether and Circle, just like freezing stuff. Yeah, it's just felt wrong that you called Circle out, because for myself, Circle combines like the bad of both worlds, I would say, because
for me it's not in any kind emotional at all.
It's just like about the functionality, and they did it wrong because they did not freeze what they should freeze, and they froze stuff which they should not froze. So,
so I promise to put on the nitro. Next topic, please.
Yeah. Yes.
LTDR and other stable coins hit the dust, and it's not easy to build the stable coins. You need to consider many things apart of creating good contracts or whatever. You need to be sure the liquidity is right. You need to make sure you are monitoring all the situation all the time. So it's not easy to be a stablecoin issuer, and pretty much the weaker get like this wrecked.
Yeah, I think you need track record, and you need also proof of trust from the market, and also you need to understand how liquidity works. I think that's the key parts. So maybe we see 1,000 more stable coins, and then after 5 years there are probably only 5 or 6 left.
Man, why did you call out something like that?
Maybe all the DeFi stable coins can get together, and they between all of them they can make $1.
True.
We are not bullish today. I just have to say it out loud. We are very not bullish today. Yeah, but it's okay.
Another shit show happening is about the Sui blockchain. Yesterday, it got stopped. Not sure about the technical details, what's going on, but you cannot relay in a blockchain that is getting stopped. Is stop producing blocks. It happened again today, especially in a bad market condition when the price is going down. If you are using financial products like we were explaining here, where you deposit collateral and you have some debt into it, and you need to be able to repay your debt, if the blockchain you are using stop like this,
Close
for me,
your position
is a big red flag. It happened in the past also with Solana. When I first
with Sui as well, it's the second or third time. Don't. Maybe I'm wrong with the third, but it's definitely the second time it happened.
Yes, so. I don't like it. To be honest, this is the heart the blockchain is like the pump of the heart, stop producing blocks, it's like, okay, you are dead.
Absolutely.
You are totally, even if they presume about technology and all this, you cannot have your blockchain stop. Even if you fix it and later and do whatever, for me is a big no. No.
Just what a bad looking for the outside. We promised to run 24/7 all day. Nobody can stop us, and then
they are going for a payment.
yeah.
Please.
But
Bro,
don't
what are you talking
let's
about?
fudge
Like,
too
not
much.
possible.
Maybe there is a partnership in line with frxUSD, and then everything is fine again. So,
yeah, maybe that. Yeah, but still, like we already talked about it, I think, they went from gaming to now like want to be much more like institutional appearing, be present in stablecoins, be like, I think I just also saw some tweets.
yeah,
about
they chased a lot.
payments.
They chased a lot.
Yeah.
Narratives, but let's see. I think they are still pretty big and have big supporters. Like who is it? How is it? I don't know his name. Ryan Paul. Right? No, Raul Paul.
Yes,
He's
mega
supporting. Yeah, he's bullish. Yeah, I don't know why. Maybe vesting is not done, but yeah, he's pretty bullish. But yeah, let's move on to the next one.
Even if we don't have nothing against sweet people, just
Nobody. No. Do you know someone?
yeah,
I do know someone, apparently. He's also German. But that's all. Only one.
Maybe that was Zai. I don't know.
No,
Okay.
I think that was some Zoom peeps, to be honest.
Please make it. Yeah, let's. I don't know. Let's talk to him.
I will find him.
It's a rare breed in my opinion, because I have really no people doing content or whatever. I really I would welcome it and would dig into it if I see something, but there's really no organic content in my opinion. But let's see. Let's not continue to FUD. Maybe it's not deserved, and they have a really big thrilled community. But I don't know someone. So.
Oh man, you said it so ironic. I had to smile. Sorry, but yeah, let's see. Maybe they are. Next one. Time to FUD again. Aniceto, your turn.
Yeah, let me get with this FUD.
Wow.
I just wanna say Hyperliquid. No,
yeah, hyperliquidated.
Yeah. Well, there is a lot of hype going on with the IPO of SpaceX getting mega valuations. So people can already buy, even if it's not launched already. They can, I don't know, bet in like a pre-market or whatever, something like this. But they have like a flash crash of 45%, and many people got liquidated, like 1.5 million. So I don't know.
It's not big, but 1.5 million is probably one insider. But what I don't understand, is it tied to Hyperliquid only, or is it something the whole pre-listing market space experience?
No, I think it was just
Hyperliquid.
Yes.
Okay. Yeah. I mean, to be honest, there's nothing to. Yeah. So we're maybe a bit contrarian or weird to say that, but from a builder side, or I think it's a big thing to launch something like that as a first mover, and also. Yeah, with the attention they currently have. I mean, you probably don't have only friends. You have probably also enemies or competitors. And if you launch something like this, that with this attention and probably money interest as well, or financial interest, something like that can happen, And kudos that they try it and they started it, but also sad to see. Pretty much, 1.5 million. What's 1.5 million? I mean, we are used to see this news on X, 250
every day.
1.5 billion.
Real talk.
Yeah, you know,
1.5 billion are liquidated in longs. Next day,
yeah, you know,
500 million are liquidated in shorts. So
yeah,
you're right.
but yeah,
It's quite a novel product here, some kind of innovation. Probably the liquidity is not there at all. Yeah, that shit happens if you are degen to go into this and you cannot wait for the IPO or whatever in traditional finance methods. You
True.
can get hit like this. So yeah.
Next one. Maybe we can do it.
So much food today.
Yeah,
We are
true.
finishing.
But I think the one episode where we, or I don't want to say we fought, I think Captain was the fighting most. But there was already one episode where we was very fighting, I would say. Yeah, next one. Maybe, I think that's a quick one, to be honest.
big one, or
Quick
it's,
one.
quick one. Yeah, yeah. I don't know. Maybe
Yeah,
all the other countries that got banned got not the news. I don't know who paid CoinDesk for putting the Spanish flag on it. But yeah, I think I don't know. Is it possible to access this via a VPN? Maybe, right?
Yeah, for the people that is not watching, is about the Spanish government blocking Polymarket and Calesi, the prediction markets. They call it prediction market. At the end is betting as well. So yeah. So
yeah, but it's pretty weird, you know. I live in Spain as well, and it's not even. For example, I was in one of these gambling things a couple years ago, and I was wondering, in Germany you have this limit you can bet on per spin, €2, for example. And in Spain there was no limit. You put $20 in, you want to order a coffee, you could come back, the money's gone, and you can put $10 or in $5 and you know, to spin one, or for one spin. Also all the lottery tickets, I'm pretty impressed they got a ban on it. With this gambling culture, you know.
Spain's
Yes.
a bit different.
Spain, you know, they promote the government itself, or the lottery of Christmas.
Yeah, right.
You get advertisement everywhere. It's part of
I was
our
not used
culture.
to this. Yeah, it was completely new to me. And then I read this. I mean, okay.
Yeah, it's like, I don't know, they don't get any tax.
It's political. I think it's political. You know, Polymarket and Kalshi play a big role currently in, I would say, attention and news, and what gets, you know, what gets the focus and stuff like that. Maybe it's tied to that and not the gambling part of it. Probably.
Yeah, or maybe this is just like a marketing campaign.
True. Yeah. Now I will use it.
Even if you want to ban these things, you understand that this is crypto. You cannot put doors in the field. You can bypass it pretty easy. It's like 1,000 times we see, oh, Bitcoin is banned in China, or Bitcoin is banned, or is dead. You can still keep doing this stuff just very easy. I don't know. So if you want to ban it, you can ban it in your laws. You can make another law creating you cannot do or use it. But practically, you cannot stop it. At least so far.
Yeah. Agree. Nothing to add here.
So yeah, let's continue.
Next one.
Oh, this one is no food. It's just I am not sure about the importance of this announcement, but you can see many big players putting together in a coalition, alliance, or whatever it is, transparency alliance, a coalition of the largest companies in crypto to unite around the disclosure standards. Here we see names like Ripple, Aave, Grayscale, Bitwise, Binance US, Anchorage Digital, Coinbase, Kraken, all big names. GSR, big players. I am not very aware of what is this about, like putting some standards on doing the stuff. But yeah, it's like supported by almost every big player in the crypto scene.
I think it's the right direction, and it's really cool to see. Makes me proud to operate in crypto if you seeing this, because maybe some more months and years with kind of this news and evolution to getting more serious is needed to attract more investors and more probably funds and stuff like that. And I think this is a good one, and yeah, happy to see something like that, to be honest. More of this, please. And I think there is more. I saw some news we don't cover today, but probably next week. It's something like that. Also token transparency and stuff like that. And I think that's needed for our space.
Yeah, totally agree.
Absolutely. I think like a unifying standard in many things. I think definitely security is, maybe the biggest topic, because we already talked about it today. That is maybe the biggest holdback for most people, for retail, for institutions, etc. Besides the regulatory framework. But yeah, let's see. I think it could if these names are stepping together on the line, it could change many behaviors. So yeah, let's see. Last news for this week for Onchain Ca H. Yeah, I think, who wants to take it? Captain, do you want to take this one?
It's pretty dark here already that I need to look a bit more.
Yeah, let me read it for you. This is basically, it is Manuel.
Okay, yeah, absolutely.
This is talking about that all of DeFi is unsafe.
Yeah, I know.
Because all the agents coding and all this stuff. Basically, this guy is the founder of Open Zeppelin. That is.
He left 7 years ago, so basically, and he came out of the woods and is fighting the whole DeFi industry. So I think it's a single-sided take. So basically, everyone has this powerful weapons now, and the good guys and the bad guys, the black hats and the white hats. So I don't see this doomer stuff. So first of all, this was just plain stupid, in my opinion, to post like something like this. And we have a reputation in some sort, and also I think 80% or something like that is relying on the service in DeFi. So yeah, really was not happy to see something like that. And also I think it's we have both sides have these weapons. Both sides can operate agents for security, and the other side can operate agents to attack or harm protocols. But yeah, so pretty weird. I don't know what was the mission behind it. Making us aware that something is not good looking. Okay, get it. But if you want to make us aware, please write an article with deep research, with solutions, or making us aware of the problems, provide a solution as well. And I don't know, if you care, open a little governance group with the most important protocols included, and talk about the stuff you think could potentially happen security-wise. But just dropping some of this is, I don't know, it's pretty weird.
Yes, and here we see also many DeFi founders answering to it, like they don't agree with it, of course. And yeah, it was.
Yeah, you need to step up. As Uniswap, FRAX, Maker, and so on, Velodrome, Aerodrome. You need to step up if someone is posting this with this following. But yeah. Good. Our founders of our protocols are stepping up.
Yeah, I think so too. So
give us the next one.
there is no next new, but there is definitely the next section or the last section for today. So I will just, let's get into it.
Let's go into the FRAX Alpha. It's not very big alpha this week. I'm sorry. If you stay for 1 hour and 50 minutes, you probably deserve better alpha.
You probably got scammed.
But yeah, we see this funny news about the Donald Trump new bill dollar. That I don't know if this is true or it's just a joke, but I don't know. I can expect everything from this man. Please, Mr. President, make us rich again. But especially other news that came out today about he will be creating their own neobank or something like this. Okay, so this bill reminds me of one thing that the FRAX team was doing in the 5-year anniversary back in December in Christmas. So I just wanted to show, this is not big alpha, it's something from the past, but let's show one of the NFTs collections that got into FRAX, and there is a specific bills that you can buy like a NFT and you can redeem back into some specific assets. So if you are not familiar with it, this was a campaign launched in the 5-year anniversary. I got one of these, I remember. So these are NFTs with a print bill on it, and then you can redeem the NFT by the underlying asset shown in the bill. Like for example, this is 1,000 FPIs, 1 FRAX ETH, 1,000 frxUSD, 1,000 FRAX. So yeah, I remember I was creating some art with this narrative. At the end, it didn't get chosen, the ones I built, but yeah, it was interesting collection there with some. It's not like you are aping into an NFT without value. You get the assets that are into it. So
even more value. So if
yeah,
you are
it's
honest,
just,
I mean, you got to get the NFT and the asset. So in my
correct.
opinion, it's better than normal NFT.
It's a piece of art and collection that has money into it.
Yeah, absolutely. Like for myself, I've also won. I have the gift, the NFT gift, like for 50 W FRAX. So it's not the biggest bill, but I got a bill and I will definitely keep it. So for me, it's just a memory, of this year, I would say, year 2025 for FRAX.
Yeah, so happy to be here through these years. We see FRAX evolving and taking steps with everything that is building now, pivoting in some cases. But as always, FRAX is one step ahead. Even before President Trump, we got our own bills. So yeah, once again, FRAX one step ahead. I think that's enough for today. We are reaching, what is the time? Almost 2 hours. If you are here, you are probably eligible to join our Discord.
Probably, yes.
Join our Discord. We are there chatting, discussing all this stuff, everything that happens, opportunities, everything you can imagine, even off topics. And yeah, we are at the end of this Onchain episode. Thank you, Royal, for your time here. Thank you, Captain, for joining and fighting together. And pretty much we are at the end. I let you the mic to say bye-bye.
Yeah, nothing to say here. Just have a good one and see you next week.
Bye-bye.
Bye-bye.